Hey everyone, and welcome back to the channel. Today we are going to discuss 5 ways to profit from a crypto crash. Let's get right into it. Analysts have recently debated whether or not cryptocurrencies are in a bubble, and the debate has divided opinion, as the overall market value of these digital assets has increased from less than $18 billion to about $180 billion this year. CoinMarketCap reports, there is surely a cause for alarm. There has been considerable deterioration in the value of these currencies recently. However, as several have fallen dramatically from their recent highs, there are several methods for investors to benefit if the crypto market crashes. Investors will have to determine for themselves which strategy is best. Charles Hayter, co-founder and CEO of the digital currency portal CryptoCompare, says this option will rely on their risk tolerance as well as where they think the market will go next. In this video, here are 5 specific methods that investors can use. Number 1. Buy the dip. Investing amid the downturn may yield impressive profits. However, it may be more difficult to pull this off in practice than in theory. To be successful with this technique, an investor must be able to time the market, which several market analysts have described as being extremely difficult. Buying a dip in a crash can be difficult, emphasized Yazan Barghouti, project lead at blockchain company Gibral Networks, because when do you know it has bottomed out? He pointed out that the price of Bitcoin fell steadily for roughly 2 years following its high in 2013. Whale Club COO Petar Zivkovsky discussed the risks associated with using leveraged digital currency. Only in a broad bull market can you profit by buying the drop, he noted. Buying the dip only works in a general bull market, he said. If the global trend reverses, buying the dip is useless. To add insult to injury, Zivkovsky cautioned investors against placing their fate in an upward trend for Bitcoin's valuation. Investing in cryptocurrencies has a high risk of losing all of your money at once. There have already been numerous major price declines in the 2021 chart. Cryptocurrency values rose steadily after each decline, finally reaching new highs. Don't pay attention to the daily charts. Instead, zoom out and take a look at the current year. Cryptocurrency is a new and unproven investment, which means that the ups and downs of the market cycle are more dramatic. Waiting out the dips is fine as long as your short-term investments haven't cost you a lot of money in the long run. Number 2. Identify the best odds of success. Even if the cryptocurrency market as a whole collapses, investors should bear in mind that certain of these digital assets might do rather well. Kraken bought CoinSetter, which was founded and led by Marshall Swat, CTO. Companies and tokens will go on to be successful, possibly a future Amazon, much like the Nasdaq bubble. Vinny Lingham, CEO of Civic, suggested that investors find quality coins with teams you can trust to execute and weather the storm, and then hold. Investors should seek tokens that have a solid basis and attractive business strategy, according to Swat, a cryptocurrency expert. Number 3. Hold on for dear life. Hold on for dear life, also known as HODL, is a strategy that many in the cryptocurrency sector employ in the event of a market meltdown. If you acquire cryptocurrencies and hang on to them for a long time, regardless of how much their value fluctuates, you're basically investing in a long-term strategy. One of the traditional approaches of dealing with market collapses, Barghouti added, plenty of investors will probably adopt it if the stock market crashes. According to Zivkovsky, while holding in this manner is absolutely a feasible strategy, investors should stick to holding the top 5 cryptocurrencies by market cap. Your instinct is to want to sell your crypto investments when you see their value fall. It's also possible to sell it low and not get the benefits of a comeback. Let's imagine you decide to sell your bitcoins when the price drops by 20%. Suppose the price goes up to its original level at some point in the future. If you've lost 20% of your investment, you may be reluctant to repurchase it. Short-term price movements are impossible to predict. It's possible that they'll continue to plummet, but they might possibly suddenly rise. This is why you should stick to your original investment plan and research. Bitcoin prices can rebound if you have faith in the long-term worth of your cryptocurrency investments. Number 4. Exiting to fiat currencies. Fiat currencies may be an option for some traders when the crypto market is down. Managing Director Tim Enneking of Crypto Asset Management, for example, routinely employs this strategy when the value of digital assets falls. In any case, Swat cautioned, it may be easier said than done to be effective with this approach. Exiting to fiat requires that you be able to time the market, both when you exit and again when you return, he said. The smartest strategy is to allocate the money you can afford to put at risk, and then stick with your plan regardless of the variations in the market. Number 5. Shorting Bitcoin. Many exchanges provide traders with the possibility to profit handsomely by shorting Bitcoin. Enneking pointed out that Bitfinex, Poloniex, and Kraken all provide this feature. According to SWAT, shorting is a tactic reserved for the most experienced investors. He cautioned that using this technique would be extremely dangerous. For investors, the most important step in profiting from a market meltdown is to do their homework before trying out any strategies. Make sure you know why prices are decreasing so that you can adjust your investment strategy accordingly. There are exceptions to this rule if something has radically changed, such as a security incident, and you no longer trust a certain project. That's it for today. If you guys enjoyed the video, make sure to hit that like button. Don't forget to subscribe and turn on that notification bell so you never miss out on any future content we'll produce for you guys. We're signing off now, but we'll be sure to catch you all in the next one.